This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, is Robb Reinhold. Now, Robb, we've had about a week in the books on the Flat Earth Trading Society. How's it going so far?
It's going surprisingly well, and not surprisingly, luckily well. The first trade we did was, it turned out there was earnings literally like an hour after we made the trade. It was a short trade. The stock dropped 10%. And in the end, it triggered all of our position management when it bounced back up. And so our first trade is in the book at plus 11%. So it was fun. It's been really fun to do. At this point, I'm seeing by the time people are going to hear this, we probably are going to have about 4 or 5 trades. Maybe not in the books, meaning they've closed out, but we're going to have 4 or 5 trades that are likely open. But I love the engagement I'm getting. I love the questions. Patrick, this is my first real stint on YouTube as a solo producer, I guess you could call it. I am loving it. And so if anyone wants to send me more messages, I'm really enjoying talking with people. Usually I just talk within our firm with other traders, and that's great too. But it's nice to talk to the public.
Yeah, you got to stick your head out there at some point. It just has to be done. So now, is this being done in real time or is this recorded?
At this point, it's being done, recorded in real time, but we're not putting it on live. I don't think that my account is big enough yet to where I can broadcast live. I think I have to meet some certain metrics. I was looking into that earlier. Once we get to that point, we may do it live, but there's a lot of production stuff that I can do to make it a much better video to watch and make it much more visual if I do everything post-production. But look, if everyone says, Robb, we don't trust what you're doing, look, everything is live. You can see it right on my screen. You can see the market price. You can see everything happening. But look, if I get too many people say, we don't think this is real, I'll throw up some live episodes. But I don't plan on it as far as right now.
I just know there's a small handful of people out there that are listening to this saying, ooh, we have a free trading signal service out there. I'm really excited about this. No, we don't. At least not yet. But stay tuned. Sign up for the Flat Earth Trading Society. Link is down below.
Patrick, I just put up a disclaimer on every single video we do now that literally says, legal disclaimer, do not make this trade. Seriously, do not make this trade. You are an idiot if you make this trade. So we're out there in front of it saying, look, this is not for following with real money. This is for following to get your own position management in order on your own trading.
Yeah, and hopefully people who are taking the time to listen to something called the Trading Psychology Podcast for a half hour every week, they are in it for the right reasons. So we're going to assume you are. Now, you might have seen the title to episode 37 and thought, well, this sounds more like an investing psychology podcast, not a trading psychology podcast. So Robb and I have talked about this, and rest assured, it certainly is a trading psychology podcast episode. And even so much to where this episode is going to set up episode 38. So just stay with us. Some of these conversations will be about investing, but it all leads into trading psychology. Stay with us. And Robb, go ahead and lead us off because we're going to get nerdy to begin with. So I'm going to have to turn this over to you. When it comes to herd behavior, there is an actual biological reason why this occurs. So let's kind of define what it is first. And then, if you can, kind of bleed into, why it happens in the first place.
Thank you, Patrick. Yeah, there is a lot of studies behind this. And we as human beings are social creatures. We form groups. That's what we do the best. And it's why we have evolved. How we've evolved is that we know how to form groups. And not just form groups, but we form these hierarchies. We form these groups to fulfill the needs of the group or to fulfill the needs of the individual. And so the thing that the human beings have done way better than any other species is to form groups. And, good versus evil, us versus them, scientists and doctors, we form these groups and it makes us so good. And so part of our DNA is we want to belong to a group. We truly want to belong to a group. And so this is where, when you get into trading, investing, and everything, you have to understand that there is this need inside of us to belong to groups. And this is where herd behavior comes along. And I'm going to include an article that is titled hurting social influence and economic decision making. It's a fascinating article, and it has lots of links to other articles on this. So look, there is a very scientific thing behind this. There's a lot to study about this, but one of the things I want to talk about is something called information cascades. Now, an information cascade is you have a certain analysis, and you're always looking for new information. And information cascades is when other people's actions, what they're doing, you take that in as information. So just think about this. You are a trader. You are a trader that trades off of a daily chart that likes to play breakouts to the upside and downside. Okay, that's your thing. You're going to be listening, watching, hearing all these things, and you're going to hear about this other trader that does this, or these other traders that did this. And all of a sudden, that becomes information, and that affects our own analysis. And then we make changes in our behaviors, which then cause another trader to make changes in their behaviors. And there's this huge cascading effect where someone's behavior changed the fundamentals of the entire trade. We saw that in 2021 with GameStop. And GameStop is just a fascinating look into the human psyche and how really everything we're going to talk about in her behavior, it happened in GameStop. We had people who got in early, who said, hey, this is going to be a good trade. And then the stock takes off to the upside. And all of a sudden, people who weren't traders became traders. People who didn't play things like GameStop started to play GameStop. And they started to join in. And then all of a sudden, it became much more than a trade. It became a community. And you had chat rooms, you had superstars, you had the prophets of the group, and you had the tight-knit do not sell, the HODLs. Remember that, Patrick? HODL?
Yeah, I think that applies more to crypto. I think with GameStop, the term that popped up during that time was diamond hands.
Oh, I forgot about diamond hands. You're exactly right. So look, here's the thing, like when you join these groups, leaving these groups can be painful because that's how we work as humans. You know, when people try to leave a cult, it's very difficult to leave a cult because the punishment from the group is so much. If you don't have diamond hands, what are you even doing here? You don't even belong in this group. And it convinces people to do things they otherwise wouldn't do. So GameStop, I think, is just a fascinating one. But Patrick, you brought up crypto. I think crypto is another fascinating one.
Well, yeah, and I think speaking of communities, I think they can be constructive or destructive because the whole reason why why so many people join them in the first place is because maybe they didn't, growing up, they never felt like they had a real community or they had a group of friends, but, I can attest to this. In most of my friend groups, none of them are like me. I'm always kind of the oddball in that group. Now, they're my friends nonetheless. We enjoy each other's company, but to be able to have a community of people who act and think like you and have the same end goal, that's really hard to find. So when you do find one, that can be intoxicating. And then you're making a bunch of money at the same time. I mean, that's intoxicating times 10.
And as I said earlier, we form groups for a reason as humans. They are mostly beneficial to us. So I don't want to come on here and be like, oh, forming a group is bad. I mean, part of a group is bad. No, it's so wonderful. And everything you just said, it's so wonderful. There's a whole lot of positives, but we have to talk about the negatives.
No, we do, because the whole ethos behind these communities are often sinister ones. So you have all these great feelings, this great euphoria, but the people who run these things, and the whole reason this thing was created in the first place, was not altruistic. In the case of GameStop, I understand why it was set up. It's set up to screw up the short sellers, and that's fine. But the whole diamond hands thing also had a dual meaning. What it really was is people inside the community, especially the people towards the top, saying, hey, in order for me to exit when I want to exit, I need all you guys to hold for as long as possible so I can be the first one out, which isn't good. And this kind of transfers over to the whole meme coin craze. The whole reason why this is set up in the first place is let me tell you how it goes. So somebody that does have, you have to have a decent amount of money to start these things because it costs money to get them onto the DeFi platforms and things like that. You have to have initial liquidity. So somebody comes up with one of these things and they get a few people in and they can get the price to move up fast. And so then they have their publicity department, which is usually Twitter, Reddit, places like that, that start talking about it solely for the purpose of pumping the stock. And so that whole machine starts going. And then more towards the end, this is kind of how you know it's towards the end. There's an article that comes out on mainstream financial media talking about a person who just made 5,000% on this meme coin. That's kind of the whole genesis of how these things play out. And watch, listen to what I said. This formula applies every time a meme coin comes out. The thing people don't understand is that mainstream media article is called a press release, and you can easily pay for those. It doesn't mean, this thing is actually the next big, the next Dogecoin, the next Shiba Inu. And the fact that we even have Dogecoin and Shiba Inu is the worst thing because we actually have examples of where these things have really worked. But most of these things don't. And it's the same formula every time. And these little mini communities form and people get really excited. And then 99% of them get dumped on over time.
That is solely targeted to the male who likes to watch NFL football. And they think, oh, if Gronkowski's doing it, I should do it. Now, look, this is where herd mentality, because they identify with sports. They identify with this group, NFL. And if an NFL person does it, then, hey, you know what? I should probably do it as well because I honor and value these people in my community.
I never understood the mentality behind that. I don't understand the correlation like, oh, Kim Kardashian likes it, therefore I should invest my money into it. I'd never seen how those dots connect.
Whoa. Don't you talk bad about Kim Kardashian. I follow everything she does.
That would explain a few things.
All right, all joking aside, we see this a lot in penny stocks as well. Penny stocks, same thing, Patrick, you said it's a formula. People go in, they find this worthless company, they buy up all the shares for, fractions of pennies, and then they literally hire people to go out and build these communities and create this hype. And it gets regular people to buy into it because, hey, look at this group. Look, this whole group is moving in here, and you see the stocks start to go up, and you say, I shouldn't get in. And then more and more people get in, and more people are talking about it. It makes it to where you end up getting in with your trade, and it doesn't follow your planar system. And that's really what it comes down to, is it doesn't follow your planar system. Now, Patrick, one of the things I've always found fascinating about herd behavior. So we're talking about herd behavior and just like all these things like, oh, you don't want to do it. You don't want to do it. That's actually not true. There's something called the paradox of trend following. Let's think about this. Trend following has been proven to be the best way to get an edge in trading. Patrick, I know you have talked for years and years and years about it. At Maverick, we are just so serious about trend trading. It's everything. But here's the irony. Trend trading is jumping in with the sheep. Trend trading is being a sheep. When we are looking at trades, we are simply trying to analyze, where is the herd? Where's the herd, and where's the herd going to get bigger? So the ultimate irony is, you want to be a sheep. You want to be part of the herd. If you're not part of the herd, you're going to be fighting a lot of trades. If you're part of the herd, you're going to make a lot of money on a lot of trades. The problem is, it's also dangerous to be part of the herd.
No, you're right. And this is some of the pushback I get from people very early on in my channel, talking about how they would rather be reversal traders because trend trading is based on the greater fool theory, which means that everything's going to be fine as long as there's somebody dumb enough to come into this thing later than you. What I have to explain to them too, especially in Forex, is this really isn't the case most of the time. Because a lot of what trends are people entering, for sure, big banks entering, and then price will trigger algorithms from hedge funds, from family offices, and things like that. And that will give us the head of steam we need to really go up higher. It's not necessarily, I guess it is greater fool theory by definition, but there's a real method to it. And that's why I always tell people to take profit as well, because you never know when the people who are really in charge, the big banks, decide to change course. But it's so much better than the alternative, because the alternative is guessing when this turn is going to happen. So yes, we are trend traders. Yes, it's not perfect. Yes, it is based on greater fool theory, but you have two choices, and one of them works a lot better than the other.
Absolutely true. And we have a saying at Maverick. We have a saying of, you can trade with the wind at your back, or you can trade with the wind in your face. Which one do you want to do? And wind at the back is much better. And that's all that trend following does. It puts the wind at your back. You could still be wrong. It could reverse in a second. But at least the moment you get in, you had the wind at your back. If you're a reversal trader, entering before the reverses happened, you are literally stepping in front of a train and hoping it stops before it turns the other direction. We really love, again, being with the trend. However, there are dangers to it. And we just talked about a lot of the herd behavior. And when you get into a trade, and especially if you are part of a community, all of a sudden, those positives of the community can start to work against you. Because what about if you were following my group and you thought to yourself, oh, this Robb's a great trader, and I'm like, guys, I'm staying in. All of a sudden, that information is going to go into your brain. And if you hold me on a platform, and depending on how high you hold me up on a platform, you will actually be influenced by what I tell you. Now, here's the irony. Let's say you think I'm the worst trader in the world and this guy is a piece of, you know what? It will actually have the opposite effect. I will still have influence on you. If I say, guys, I'm getting out of this stock, or I'm getting out of this Forex trade. If you have such a low opinion of me, that information will actually say, I'm going to do the opposite because this guy's always wrong. As you see, there's really a lot of activity in there that could cause you to make some mistakes and deviate from your system. And so that's really the unhealthy herd behavior, is I call it the going over the cliff. We talked about being with the herd. Back in the Old West, the people in like Wyoming and Utah, they would gather up a herd of buffalo, and buffalo have a very strong herd mentality, and they would just run them towards a cliff. And as soon as the first couple fell off, they would literally just stop their horses, and all the buffalo would jump off the cliff, even though they were no longer being chased. Why? Because they're simply watching the one in front of them. They weren't watching anything else. Whatever the one in front of them did, they did the same thing. So that is the danger of trend following, is that herd mentality is going to get you to say, I identify with the group more than I identify with my rules. And that's when it's dangerous.
Yeah, and I think as traders, especially, I would say more inexperienced traders, when you get caught up in these really big runs, you tend to also see media talking about these big runs, and it gets you excited. And it makes you think, and we've talked about this statement before that's really a killer of wealth in general. Oh, it's just going to be like this forever, or it's going to be like this for a very, very long time. Well, that's not what trading is. Price moves in waves. Things retrace. Sometimes things retrace for a very long time. Sometimes the retracement's deep. You just don't know. So yeah, when things are going really well, I remember I would get maybe, let's just say like a Euro Kiwi trade, and I would go long, and it would, I'd be like 500, 600 pips ahead. I would get so excited. I would want to go look and see if there's any news stories on this, or if are people talking about this, because I wanted to stay in this. I wanted 500 more pips. Because I thought there was really something happening here. So I needed to justify that bias somehow. And when I found it, I would fall in to this line of thinking and say, okay, I don't even care if there is a retracement. I'm going to stay in this thing despite what my system tells me, because this is really exciting. This is really intoxicating. And I have that confirmation from other people, which goes back to what we were saying before, Rob. Having these communities, sometimes these fabricated, set-up communities that are working against you, all in agreement together. So it's not just you. You thought, wow, this is really something. This could be something huge. And then all of a sudden you have all these other people, sometimes renowned people, saying the exact same thing. That's really tough to break from.
And I love what you said in the beginning. You said, okay, you're in a Euro Kiwi trade and you're up big. This is where, over the last couple episodes, we've said the red flag should be when you start to have delusions of grandeur. That you need to put that somewhere on your computer screen. You need to write that down somewhere. You need to get a tattoo on your forearm. Okay, don't do that. But when you start reaching the delusion of grandeur stage in any trade or investment, that should be the biggest warning signal that you've ever got in your life. When you say, oh my gosh, I'm going to plan out my family's future. I'm going to start planning out vacations. I'm at these really exotic locations because, man, look at all the money I've made in trading. Look at what I've made in this meme coin. Once you hit delusion of grandeur, you should have all the alarm bells going off in your head because that is when you're super, super dangerous. And I love what you said. You're up big, and then all of a sudden you're thinking, I think I can squeeze another 500 out of this, and you go find a reason to stick in. That is dangerous. So please be on guard for delusions of grandeur in everything.
But you had said earlier on in the episode that there are actually two sides of this. There's the unhealthy herd behavior, which I think we've illustrated pretty well at this point. But you've also said that this can work in your favor. Now, how does that, given all the pratfalls we just described, how can this actually benefit us?
Great question. And I want to tell a story that I try to tell the story as much as possible because it is just so wonderful. I started trading in 1997, and my best friend Joe, he started trading with me in 2000. And we would always trade together and talk trades. And, we would get in disagreements sometimes. And I got in an argument with Joe once about a trade. And I said, Joe, I know I'm right. And Joe looked at me like I was the biggest idiot in the world. And he said, I don't care if I'm right. I just want to be on the right side of the trade. And I just stopped. And I said, holy shit. I am way more concerned with being intellectually correct than just trying to see where the move's going to be. So this falls back to trend following. A real trader is simply trying to decide where the herd is going. And frankly, a lot of the things we look at, Fibonacci retracements, Gann fans, whatever it is that you look at, all it's trying to determine is where's the herd going to be in the future. And so if you take your mind off of all these lines that for the most part are artificial lines we're drawing on our charts, and you just think about where's the herd going to be? If your duration of a trade is 5 days, then hey, where's the herd going to be in 5 days? And it's really a great way to think about trading because now you're no longer concerned about being intellectually correct like I was. You're very likely to just say, oh, I was wrong on where the herd's going. Let me take my loss and move on. So I really like thinking about herd behavior and thinking about my job as a trader is to simply figure out where the herd is going to be in the duration of my time frame of my trade. Thinking about it that way is such a positive way to think about trading. What do you think about that, Patrick?
I think it's really interesting because you bring up a great point. And I wonder, I want to see the percentages on this, but there's no way to measure it because there's that conundrum, right? At the end of the day, if you had to choose, would you rather feel intelligent and validated, or would you rather have more money? The answer kind of seems obvious when I say it like that, but I don't think it's that obvious.
It wasn't to me. And actually, to be honest with you, at that moment when Joe said that to me, I realized it was more important for me to be intellectually correct than to be profitable. Because I wanted to see myself as smarter than the idiots. I wanted to see myself as above the herd. I didn't want to go with the herd. I'm too smart to go with the herd. I got to figure this out on my own. And it was a great example, and I love to tell people this story because it completely changed the way I even looked at gathering information and making analysis, and realized I was more focused on being intellectually sharp than to really say, hey, where's the trend going on this? Where's the trend? I was drawing 1,000 lines and doing 1,000 different things on a chart, and I kind of missed the whole thing of, hey, look, If more people buy it than sell it, it's going up. You don't need to draw a line for that.
Well, okay, that's all well and good. I think pretty much everybody who's listening to this episode wants to follow the trend, and we kind of understand. Okay, sheep are dumb, whatever, but those sheep are rich, and they can make you rich. So let's just put the intellectual stuff aside, follow the trend. Now, I have my ways of doing this. Do you have particular ways to where you can spot a trend early on in its life cycle? I want to hear about them because I don't think we've ever talked about this.
Well, that is a great question. And that is literally the $25 million question that everyone is thinking about is, what is the next trend going to be? And look, we can even boil it down into currencies. What is the next big move in currencies going to be? Is it going to be yen? Like, what happens when the Bank of Japan actually starts to tighten? Like, what could possibly happen in the Forex market? And then we start to think about getting in where the herd is going to be. Again, trading is figuring out where the herd is going to be on your desired time frame. Now, some of these time frames are 1 day, some of these time frames are 5 days. Some of these time frames might be 3 months, might be 1 year. So it's really about thinking about where that herd is going to be and finding these possible secular trends that are going to happen. One of the things I learned a big lesson in 2015 when I told my traders who told me, Rob, you got to get onto this Bitcoin thing. And I said, that's the dumbest thing in the world. Just intellectually, it didn't make any sense. It was stupid. It was dumb. Why would I buy fake money with real money? And so I discounted it because intellectually, I didn't want to buy fake money with real money. And then I missed out on this opportunity. So when the metaverse came about, I'm like, hey, I don't get the metaverse. I don't understand it, but let's take a look at buying real estate in the metaverse because I know now that I want to get ahead of where the herd's going to be. One of the things I've started doing since all the meme stocks in 2021, there are services that will actually publish before anyone else gets it, where you can get what congresspeople and senators are buying with their own money, insider sales of congresspeople in the US. Now look, I'm not buying the stock because Nancy Pelosi bought the stock. I don't care what Nancy Pelosi does. What I do care about is the herd behind that. When the herd finds out that Nancy Pelosi bought a certain stock, I would love to be in there early on and let that thing ride. I have no intention. I don't even care what the stock is. I don't even care what it is. All I care about is the herd that follows it. And that's what you saw with the meme mentality. And if you remember, I think it was 2 episodes ago, I talked about the dot-com crash, how I tried to short it. I talked about '07, how I just sat on the sidelines because I didn't want to buy it because I didn't want to buy at the top. And I told you that, hey, when I see the next big trend, I'm going to jump on it. And that's how trading is. You want to be in front of the herd, and you can find all these little ways to get in front of the herd. So whenever a congressperson buys something, I'll jump in, throw some money. Again, I'll have my stop. If it doesn't work out, it doesn't work out. But I'm anticipating where the herd is coming from. Patrick, what do you think about that?
Well, I certainly like the Nancy Pelosi idea. The ROI on something like that is damn near undefeated. But when it comes to trading, though, you said something about the Bank of Japan. I want to offer a little bit of pushback on that and get your thoughts. Because when it comes to fundamental analysis like that on the longer term scale, it's good to know. But the problem is, even if it's true and we know it's going to happen, we don't know when it's going to happen. We don't know how long it's going to take for this potential tightening to take effect. I think a really good example is the Bitcoin halving. So for those who don't know, there are, I'm doing air quotes, miners out there that produce Bitcoin. That's how we get more of it. And every 4 years, there's something called a halving, which means that every 4 years, it becomes twice as difficult to produce 1 Bitcoin than it did before. Now, if you were going to have any kind of supply shock like this in something like gold or oil, this would send the price skyrocketing. But for some reason, when these halving events come about, soon after, the price doesn't go up. It often dumps for a while. And then, eventually, when people decide that, okay, it's time to move the market back up again, then that's when it happens. So if you're playing fundamental events like this, sometimes it can really hurt you because you never know when the actual move is going to take place. You know it is, but if you're aware of these things beforehand and you have a stop loss, which you should, it can actually work against you. Do you know what I'm saying?
Absolutely, 100%. And my rules are technicals must confirm fundamentals if you're going to use them. So let's say I do think, Bank of Japan is all of a sudden going to start tightening. That's great. We call that cocktail talk at Maverick Trading. You and I could sit down over a beer and talk about it, but you can't trade that. The technicals must match the fundamentals, or you're too early. You have to sit and wait. And there's two unknowns out there. There's known unknowns and there's unknown unknowns. So let's take the Bitcoin halving. That is known. We know when it's going to happen. We know that it is going to happen. We just don't know what the price action is going to be after it. That's a known unknown. And known unknowns are very easy to trade. You know what they're coming. The first Friday of every month is a non-farm payrolls report out of the U.S. We don't know what's going to happen, but we know there's going to be some movement. Those are easy to play. The unknown unknowns are virtually impossible to play, and you're right. If you try to play them, you're going to be sticking your neck out with really not a clue of when or why and how it's going to happen. So we don't really love trying to play the unknown unknowns at Maverick.
And that's the answer I was looking for. On my investment podcast, what I say, especially in the crypto market right now, with things falling the way they are, we don't know how far they're going to fall, and we're never going to scoop the bottom. But really, the best thing to do is make a list of the things that you want to invest in and track them on your chart. And maybe step back and look at the weekly. And as soon as you get an actual signal there, then go ahead and start building your position. Maybe don't put everything in, but at least get it started so the market doesn't take off without you. You're probably going to get in way higher than the actual bottom, but that's fine. There really is no other way to predict things like this.
The only way to ever get a bottom is to be a contrarian, which is literally going against the herd. We'll talk about that in a little bit. That's a dangerous thing by itself.
Yeah, can be. And like I said, that is the name of my podcast. So it's like, look, there's a right and wrong way to do things. Let's talk about the right way. It's not going to be perfect. Things are going to take longer than we want, but you just don't have a choice. But you can stack the odds in your favor a little bit, Rob. One of the things I kind of wanted to wrap up with was something that you had mentioned on our outline, and that is being early to the adoption of new technologies out there. Now, I'm very guilty of not taking advantage of this. For me, if it works, why should I change it? And the answer to that question is, well, because it could be better, and you should at least pop your head out there and see what's available to you. Why wouldn't you?
As you are trading and investing and doing all the things in your life, you really have to be looking forward. Just to do a quick story, my wife and I went to Costco years ago, and she's like, "Oh, we should buy Costco stock." And I said, "Okay." Like right now, Costco has this many stores. And for us to make any money, Costco will have to get bigger with more stores, bigger stores with more people coming in them. Like, do you think that's going to happen? And she looked at the absolutely full parking lot and the line out the door. She's like, "No, it probably doesn't get much bigger." And I said, there you go. That's what we're trying to figure out when you're investing. You're trying to figure out what's going to be a bigger company 10 years down the road. What's going to be a bigger company than it is today, because you're buying in at today's size. So like everything, you're trying to say, okay, where is the market going to be in 3 years, 5 years? What's happening? I missed it on Bitcoin. I absolutely missed it on crypto and Bitcoin. I definitely was not there yet. But now I'm looking at new things saying, okay, how can I use this? We are making a big push at Maverick into getting into AI and using AI. It's really exciting, and I think it's something that everyone should be taking a look at in their trading.
Yeah, it's so weird because when these new technologies come about, we almost don't know how to process them, but we're still really interested. And I've always said, too, there's a concept called boom, bust, echo. You brought it up with the metaverse. It's happened in crypto many times. See this wild boom, and the narrative is always the same. Oh, wow, this is just how things are going to be from this point forward. And that's actually not true, because that bust cycle almost always follows. Then you have an echo cycle, which just is kind of flatlines and nothing happens and people lose interest. And then things finally start taking off the way they were supposed to. So it would be super easy just to say, oh, AI is it. Boom. Snap my fingers. Let's just do this for the rest of our lives. But the market just doesn't make it that easy on you. So if you want to take part in these new technologies, by all means do it. Just understand that it's not going to be up only during this time.
Patrick, your boom bust cycle is spot on. And this is where herd mentality, herd behavior will hurt you. Yes, right now there is a craze in AI. And right now you look at all the stocks and you think, I'm missing it. I'm missing out. I started out with the .com craze. The internet was like brand new. Companies were just getting websites. And there was a huge boom. And then there was a bust. And then there was the echo period that lasted 15 years. 15 years. The NASDAQ 100 did not recover back to its high that it made in 2000 until 2015. That's 15 years. So whenever you get into these, understand where you are in the cycle. Again, this is herd mentality. You're early in the cycle. So this is not something you hold forever. Look, if you want to sell some and hold some, great. But understand they're always going to be this cycle. And then what's going to happen is it's going to become introduced across a variety of platforms, and the winners will emerge out of the destruction of a lot of them. Understanding that, it allows you to get in and be with the herd for a little bit and then jump the heck out. That's kind of what this episode is about, is that the herd is great. You're trying to figure out where the herd's going to be. Let's figure out where the herd is. Let's get in, but then let's not go over the cliff and be idiots. Let's not deviate from our systems just because Tom Brady was on TV saying something. Let's be true to ourselves. Let's be true to our trading system, and let's not get shaken out of that whatsoever.
Because the world is hoping you don't hear this, because they are setting things up for you to be their exit liquidity. They want you to stay into GameStop as long as possible. They want you to stay in these meme coins as long as possible. That's why they have all these Twitter bots. They have all these followers somehow, and everything they say gets a bunch of likes because there's your social proof. This is all orchestrated to get you to stay in the market longer than you're supposed to. So just remember that. Don't be one of those suckers. I think, we go back to talking about, the whole intellectual aspect of it. Who wants to be the dumb guy that fell for this other smart guy's exit liquidity scam? You don't. So you're absolutely right. Stay in as long as you're supposed to stay in, but then get out when it's time. And that's going to kind of bleed into next week's episode, everybody. So stay tuned for that. And whether you are a trader or an investor, we hope you enjoyed episode 37 of the Trading Psychology Podcast, and we will see you next week.
Goodbye, everybody.